Graceman Knowledge All, GMK. Welcome to my YouTube channel, where you are taught all you need to know about accounting, finance, and lots more. Remember to like, share, and subscribe.
Having done a detailed exposition on IAS 16 property plant and equipment, somebody asked a question on the difference between fixed assets register and fixed asset schedule, and then we deem it fit to have an episode on this so that professionals can understand the difference between fixed asset register and fixed asset schedule, and what are they used for, what purpose do they serve individually, and that has led to this episode. In this episode we have fixed asset register versus fixed asset schedule. What is fixed asset register? Fixed asset register is a record that contains specific details of each of an entity's property, plant, and equipment. And what are the details that are in fixed asset register? We have the class of the PPE, we have the name, we have the serial number, we have the particular date of acquisition, we have the purchase cost or cost, we have the location, and we have the estimated year. So that means that when you see a fixed asset register or you want to come up with a fixed asset register, these are the items that must be found in the fixed asset register. We talk about the class of the assets. This could be P&L, this could be equipment, this could be furniture and fitting, this could also be motor vehicle. That is the class of the asset. When we talk about the name of the asset, under P&L, it could be generator, it could be machinery. Under equipment, it could be computer, it could be laptop, it could be server. Under furniture and fitting, it could be table, it could be cabinet, it could be chair, it could be shelf. Under motor vehicle, we have it could be a lorry, it could be a jeep. So we have this template. For example, this template, you want to fill it with the property, plant, and equipment of an entity. We have the asset number. The asset number could be F and F slash 22. This 22 can be 2022 slash. Let's assume the company has many branches. Lagos slash Oman. What's the name of the asset? It could be chair. Location, purchase date, purchase price, depreciation method. For furniture, we have it straight line method, depreciation with the next. So usually, like, what we'll do is to create a Google sheet that will have the template for fixed asset register and fixed asset schedule. But in this instance, or in this scenario, this is what we have here. So, but usually in practice, what happens is you have each of your sheet for each class of assets. So, for example, this sheet now will be for furniture, while we have another sheet for equipment. And if, let's assume, we want to do for equipment, what would that be? That could be what? EQP slash 2022 slash still Lagos Bank slash 01. The first shop could be what? Could be server, still Lagos. And we have, let's assume this was worked on the first of 17th of May 2022. Purchase price, it was bought for 9 million. Depreciation method, straight line. Depreciation rate 25%. Let's also assume for motor vehicle, we have We have MB, still the year 2022. It depends on whatever number you want to. You are free to choose the code that works for you. Once you pick a particular code, you must be consistent with that code year in year out. Why? Because it is that same code. Say for example for the assets, you want to do asset labeling, it is that code that you have on all your assets in their order. So take note. Still for Lagos branch, the first Lexus GM location Lagos. When was it built? This was not built 5th of August 2022. How much was it built? 22 million naira. So we have that for fixed asset register. So we go to fixed asset schedule. Now we go to fixed asset schedule. What is fixed asset schedule? Fixed asset schedule is some showing the cost, the depreciation charge, the accumulated depreciation loss, so accumulated impairment loss, reclassification, disposal, and the carrying amount of each asset of an entity's property, plant, and equipment. It was mentioned that fixed asset register shows the details of each class of assets of an entity, of each class of an entity's property, plant, and equipment. And it was explained the details include the cost, location, depreciation rate, location, and other stuffs. While fixed asset schedule helps to show the cost, depreciation charge. And please do note, as discussed in previous episode, that accumulated depreciation is the year in year out depreciation of an asset per time. Recall that we have two models. We have the cost model and the evaluation model. So fixed asset schedule helps to show the summary of the cost of the assets per class of asset, the depreciation charge for the period per class of asset, the accumulated depreciation for the period per class of asset, the accumulated impairment loss for the period per class of asset. And should there be reclassification of an asset, say for example an asset was under furniture and it was now reclassified, the entries will show that. And in the situation where an asset is disposed, last episode we talked about the recognition of assets. You can get the link up there to watch. So in the situation where an asset is disposed, it will also show in the when the fixed asset schedule, and the carrying amount year in year out will also be shown in the what, in the fixed asset schedule. So we go to the template of fixed asset schedule. This is the cost of the assets at the beginning of the year, looking using the historical cost. This means that the asset that we acquired this year will be added, will be brought forward, and that is what we have here. In the template that will be shared, the link will be in the description and the comment section. You are free to download it, and should you have any question, you can always send an email to us, and also reach out to us. You can always leave comments so that we can attend to any question you have relating to fixed assets register and fixed asset schedule. So having brought forward the cost as at the beginning of a particular year, the next thing to do is to treat reclassification. Reclassification is not something that happen year in year out, but in the situation where it happens, what do we do? What we simply do is to subtract from reclassification For reclassification, the PPE is subtracted from the source and added to the yes. What is this saying? This is saying that should it be that you want to reclassify an item in equipment to be added to furniture and fittings, what do? We simply subtract such item from equipment and we add it to what? To furniture and fittings. That's reclassification. So for reclassification, what do? We are reclassifying an item of asset from one class of asset by moving from one class of asset to another class of asset. So what happens in that situation, just as I said, the source, the item of the item of the asset will be subtracted from the source and be added to the what? To the destination asset. Now additions. Recall that the balance we have here was the historical cost as at the previous accounting year. So what do we need to do? We need to add the items of assets that are acquired in the current year. Items of assets that are acquired in the current year. So what do? All this will be added. In the case of disposal, recall that we said that an asset can be disposed, and once an asset can be disposed, one of the criteria of the recognition, we need to derecognize it. Why? Because the asset is already part of this historical code that we have been bringing forward. So in the bid to derecognize it, we need to do what? We need to remove it from. So let's assume that during the year one of the vehicle was sold, we need to what? Subtract the cost of the vehicle from the motor vehicle cost. Make fully aware that this is where we have our cost. Let us also assume that a part of the furniture and fitting was also what? Disposed. That will be subtracted. Take note. Also we go to depreciation. So we add or subtract depending on the situation. We have our additions, subtract if there was what? Disposal. So we go to depreciation. What is depreciation? Reduction in the what? In the economic value of an asset or of a property, plant and equipment. So what do? This is also our what? Our opening balance of our accumulated depreciation. Recall that we said that carrying amount is historical cost minus what? Accumulated depreciation. We are going there. We are going to get there. So depreciation here, this is the same thing as what our accumulated depreciation, because it is the depreciation, okay, as at the end of the previous accounting year. So what are we doing? We bring it forward. Also reclassification, because we are reclassifying, we are moving an asset from equipment to furniture. We also need to move the accumulated depreciation of same asset from what? From equipment to furniture. Why? Because if we don't do that, at that time that we are disposing that asset of from the destination class of property, plant and equipment, it would have understated the what? The carrying amount of furniture and fitting at the time of disposal, but so as to match the carrying amount and the historical cost together, or so as to match the depreciation, accumulated depreciation and the historical cost. It's also important to adjust, to reclassify the accumulated depreciation, okay, when the item of the asset is reclassified. Look at this now. When we're classifying the historical cost of the asset from equipment to furniture. Also, the accompanying or the accumulated depreciation as at that period of what? Reclassification must also be what? Must also leave equipment and also go to what? Furniture. So that at the end of the estimated life that we are, or at any point the asset is disposed, it will eat furniture and fitting. That means that furniture and fittings historical cost will be subtracted, the accumulated depreciation will also be what? Subtracted. But let's assume that it was not subtracted. The calculation, the accumulated depreciation of the calculation was not subtracted. That would mean that the accumulated depreciation as at the time of calculation is still under office equipment, and at that time of the exposure it will be subtracted from furniture and fitting, and that will mean that what, there is a mismatch, because the accumulated depreciation that was subtracted from furniture and fitting was not added to it as at the time of what? Reclassification. So having said that, we now go to depreciation charge for the year. So going to depreciation charge for the year, what is the depreciation charge for the year? We simply calculate depreciation for the year and we charge. So what do? We add the depreciation charge for the year. But what are we trying to arrive at here? We are trying to arrive at the total what? Accumulated depreciation at the end of the period, because that is what will help us to get our what? Carrying amount at the end of the period. So we are also adding our depreciation charge for the period. The computation to the template to arrive at the depreciation for the year, month on month and year on year, will be provided in the template in the Google Drive that will be shared in the description. Recall that disposal was deducted from the historical cost. That also means that the accompanying accumulated depreciation as at the period of disposal must also be subtracted from the accumulated depreciation. Why? Recall that when we were doing the recognition, the accumulated depreciation as at the day of disposal was debited back to what? To disposal, to the accumulated depreciation account. Why? Because the asset is no longer in use, and once the asset is no longer in use, what will happen? It has to be recognized. So there is need to effect that recognition in the fixed asset schedule, because it is the fixed asset schedule that determines what will be posted into the financials with respect to the depreciation, and that also means that the carrying amount of each class of asset in the fixed asset schedule must be the same as the carrying amount in the financial statement. So what do we need to do here? We also need to subtract the estimated accumulated depreciation of the asset disposed at the day of disposal. So having done that, that now helps us, the combination of this cost and accumulated depreciation will now help us to get our carrying amount. What is this saying? This is saying that this will be the carrying amount as at what? As at the previous accounting year. And how do we arrive at this? The simple check to arrive at this from this table is what? Our historical cost as at the previous accounting year, and my what? My accumulated depreciation opening balance at the end of the accounting. So that simply means that my A plus B, so that now means that for my previous year carrying amount balance, all I need to do is to do what? A minus B. Why this is my A, this is my B? Why is it so? It is so because this was my closing balance as at the end of last accounting year. This was also my what? This was the closing balance of my historical for at the end of the last accounting year, and this was my closing balance of accumulated depreciation as at the end of what? The last accounting year. So that would help me at a glance to arrive at my carrying amount as at the end of what? Last accounting year. Take note of something. That now means that for me to arrive at my carrying amount as at the present accounting year, what do I need to do? Now in this accounting year, this is now my what? My closing balance in the new accounting year. This is also my closing balance. So why this is my closing balance of the historical cost in the present accounting year, and this is my closing balance of my present balance the new accounting year. What do I need to do to arrive at my carrying amount in the current accounting year? I will make this my C, and I also make this my D. So the formula for that will be my what? My C minus D, and that will help me to arrive at my what? Carrying amount in the present accounting year, which now means that this my depreciation charge for the year, the accounting entry as we know is to what? Is to debit depreciation and what? And credit accumulated depreciation in the books of account. So once we have all this charge for the year, and for this disposal, what do we need to do? we need to do what? We need to credit our what? Our PPE depending on the class of account, right? And do what? And debit our accumulated depreciation as at the day of disposal. And should we have any gain, if it is gain on disposal, what do? We credit gain on disposal. And if it is loss on disposal, we do what? We debit loss on disposal. Thank you so much for watching. Do not forget to like, share, and subscribe.